Hello everyone and welcome to another weekly update. US equity markets declined for the second consecutive week as investor sentiment remained on the cautious side, weighing some encouraging economic data against the ongoing supply chain disruptions, a recent weakening of the Chinese economy, and the implication of a rise in the corporate tax rate from 21% to 26.5%, as well as a capital gains tax from 20% to 25% in the US. The latest consumer prices report showed that inflation has moderated in August, partly due to the end of the base effects and a decline in used auto prices, which was a key contributor to recent inflation pressures, indicating that supply shortages are beginning to clear. Still, inflation will likely settle in at higher levels as labor shortages and supply bottlenecks clear more gradually than anticipated. On the other side, ECB President Christine Lagarde stated that the Eurozone economy is recovering faster than projected 6 months ago, owing to a rapid vaccination campaign that allowed large sectors of the economy to reopen. Consumer prices have been on the rise in the region, and she expected the combined GDP of the Eurozone to return to its pre-crisis level before the end of the year. Peaking inflation rates in the US should take some pressure off of the Fed ahead of this week's meeting, and investors will expect monetary stimulus to be withdrawn at a regular pace at the end of the year. This approach should not result in significant tightening of financial conditions, but there will be limited room for valuations to expand further, and equity returns will be heavily dependent on corporate earnings growth. Thanks for listening, and I wish you an excellent week.